Hello everyone, welcome to the channel again. This is Big Dollar FX, and today we are going to be looking at rejection zones. Let's look at and talk about rejection zones. What are rejection zones? Rejection zones are areas in the market whereby the market was in a bullish trend or in a bearish trend, and the market keep on pushing up or pushing down and gets to a particular point and then couldn't continue to push down again. And what happens is it forms a wick at the body of the candle. You understand? The body of the candle starts returning back and bouncing back up or bouncing back down and giving us a rejection there. Forms a single wick, a strong wick over there. That is what a rejection is in the market. And the importance of rejection wick is it actually tells you what is likely to happen in the future market. Understand? Is the market going to continue pushing up or pushing down? Rejection zones I can actually tell you that yeah, the market has actually gotten to this point, and I think if the market comes back here, it will continue pushing up. And it's a very quick and nice setup. You just have to know your and get good with your psychology, then know your support and resistances, and then you are good to go. You don't need to go and start analyzing every single thing that is in the forex market. Understand? That is the importance of rejection zones. It helps. A lot of people who doesn't know how to analyze or do much things, like I can give you an example, price action traders, they don't do much in the market. They also make use of rejection zones and support and resistance. So let's take a quick look into this and see what rejection zones looks like, and then how you can actually make use of it. So this is what it looks like here. Here we have this rejection here. Okay, let me use this. We have this rejection here. Let's assume the market is still over here, and we have this rejection here to the push to the upside. And then what you have to do is just you draw out your rejection. This one, this first one particularly, and then we hope that the market is going to come back to it and then give you a touch. If the market come back to it and then give you a touch like this, for you to get a confirmation, you don't have to rush and join and enter the market just like that, unless you want to get a confirmation. You want to take a sniper entry. Understand? The market returns back to the rejection zone, and then give us this touch and give us a push to the upside. All you do is that you see, take out your stuff and then you place your entry here and your stop loss below, and then you take profits above, maybe here or somewhere here. You see, you made about 140 something pip over here. This is what rejection zones looks like. And if you look back into the market, you will see practically a lot of it. A lot of it. And just let's assume. And what you do is how to master this rejection zones is you have to make use of the market, the market structure. If the market is actually in a downtrend, you have to always look at your rejection at the upside and expecting a push to the downside, because the market is already in a downtrend, which is a bearish trend. If the market is in a bullish trend, just like over here, the market is about to pushing up, and that's why we got this over here. If you look here, we have this rejection zone over here. The market is already in a downtrend. We have this one. This is a very big rejection zone, and then we got this here. And what happened? The market came back to it and then give us a push to the downside. And if you want to take out your profit, your take profit should always be at this point. Understand? Your SRH should always be below, above the week, and the take profit should be at the recent low. This recent low that we got here. So if you took this here, you can actually take out your profit here. You don't have to worry about the whole movement in the market and every single thing. You just have to catch your entry and then take out your profit and then leave the market. You understand? And if you look here, the market is in a bearish trend. So we are looking for the push in a bearish trend, not in a bullish trend. Then coming to bullish trend, we have rejection over here. We have rejection over here, and then we have this entry over here. I don't like taking sniper entries for some reason. So you can actually take your profit over here. Maybe you might, if your stop loss is actually here, you might get stopped out, and then you can maybe re-enter. You understand? So we got this over here too. So this is actually what rejection zones looks like. You can actually find this everywhere in the market. We have this one here, and then the market came back again and then sold down. If you actually take your profit here, that is a lot of money, you made a lot of push. Also here, we have rejection zone here, and then the market came back and gave us a touch here. If you actually bought from here, and then you take profits at the recent high, you actually made some money from there. So rejection zones are something that you find everywhere in the market. You understand? You actually find it everywhere in the market. Just like this one now. This one actually works with something. Maybe it works with something back here. Okay, look here. We have I identified this place as a strong support. So there has been a rejection zone behind here. We have a rejection zone behind here, and that's why the market came back and then give us a touch. So if you want to analyze these rejection zones and find it out, all you have to do is go to your daily time frame and then you can mark out the ones of your daily time frame. Like these ones are from daily time frame, then these ones are from 4 hours time frame, then these little ones are from 1 hour. Daily time frame is something that you cannot wait for. You have to wait like days, weeks before the market can actually get to that your entry point, and then before you can now take your entry and buy or sell. Then 4 hours, you have to take your time sometime, maybe a day or 2 days. But for you to get a quick entry on what you're looking for in the current market, you have to actually make use of your 1 hour. 1 hour is just like a clear view of whatever you want to see in the market. So we also have this here. We also have this here, and the market came back and touched here, and then you can actually take your sell to here, or you can actually risk it by taking your entry to the downside, or you can make use of the 4 hours, and then your take profit should be here, because if you look here, there is no much support and resistance is here, or you can actually take out your profit right at this resistance. Understand? If you sold from here, take out your profit over here. You see, that is the use of 1 hour time frame. It gives you a clear view of what you want to look for. So if you don't know how to analyze charts, if you don't know how to do much in the forex market, you can actually take out your time. Nothing actually comes easy. It's going to take you time. So you take out your time, you keep on looking at the market, watching out these zones, drawing out the zones, and waiting for it to come back there. Then you can actually take your entries. 70% out of 100, it will always work out for you. When you master it, it will always work out for you. And it's like a clear setup, which you need. You don't need to actually drawing all this, marking out up and down, and trying to find your entry. So this one is actually enough. You understand? You have to just take out your time, practice it, and then master it. You understand? So this is what we have for today. And if you want to join our Telegram channel, the link is actually in the VIO. So you click our link and you join our Telegram channel. And then don't forget to like